Rob Bezette, Director of Alceon Group, welcome to Inside Network's Income and Defensive Assets Symposium.
Thanks for having me.
A pleasure, Rob. Can you expand on Alceon's size and operations scope in the lending sector?
In real estate, Alceon's about $3.5 billion across Australia and New Zealand, and about 1/3 of that is in equity and 2/3 in lending.
What are the most important characteristics a non-bank lender's got to have in the credit markets?
Non-bank lenders are now a critical part of the lending markets as the banks have retreated, and they have to be able to compete on price. They have to be able to manage their loan portfolio well, and they have to be able to provide consistent returns to investors.
What do you think are the main reasons that advisors should consider including credit in portfolios?
Credit is obviously a way to diversify your existing portfolio in isolation, but within real estate is a very unhomogeneous market. There's subsectors, geographies, all those sorts of things. So within a real estate asset class, which is often considered to be a single asset class, you're actually exposing yourself to a range of markets.
What about the role that non-bank lenders play in the economy? How important do you think the source of capital your part of the industry provides, how important do you think that is to economic growth?
I think it's essential because property development is a major part of Australia's GDP and its growth story, and the non-bank lenders are increasingly the dominant part of the market for developers and landholders to finance their operations.
What's the due diligence process that Alceon goes through for a new investment in the fund, and what's the ballpark figure for how quickly you can turn it around from starting to consider a deal to lending the money?
It depends on the deal. Some deals might be years in gestation. If it's an existing client and we know about the deal and it happens quickly, it could be as little as 2 weeks. But generally we would say from finding out about a deal, initial due diligence, approvals, term sheets, funding, it would be 3 months. If it's a well-progressed project for construction, say 6 to 8 weeks is where we can fund, and that's a key difference to the major banks and part of our competitive advantage.
Thanks, Rob. Thanks for your participation.
Thank you.